So let's look at market structure and how it behaves. And one of the key thing is this. When you go back, you begin to see certain structures forming, and once you identify those, it's telling you something. And normally, if you can see, price came, then shot all the way up, then started bouncing in. So price is squeezing, and at one point, it's going to have to let go of all that energy. So this on top, you can see that this line touching the other, and that when it broke all the way up, it failed. So normally when it fails and goes back into the range, it's either it will stay in the range, but when you see it going back down to the range, it's either this can happen, it can come, fail to retest this line, and then continue going up, right? There is that scenario. But as we can see in this scenario, it broke and came all the way down, right? But then from that, it also tells us something, that in as much as price broke down, you'll be looking at certain key levels that it might bounce back up. So the first level is this one. You want to keep an eye on that. The second one is that. You want to keep an eye on that. The third one is this one. You want to keep an eye on that. Why do we keep an eye on those? Is because of the previous reaction of that line, right? And the other line that you might also be interested in is these support levels on top here. What does it, where does it go? Does it play out in the future or not? So that tells you another story. So when price is going all the way down, you've got those places to watch out for, right? In terms of how price will go. And definitely, as you can see, along these lines, we can see some price behaving in a way. Like here, it did behave. There it just broke out. There it did react. There it reacted. There it reacted. So those are strong places to just keep an eye where price will react in a certain way. And if you continue going forward, you still see the same. Price reacted there. Again, it also reacted there. So this is still a valid line going forward, right? And obviously, we're going to use our what? So let's just remove this and use our actual tools, which are these, right? So we're looking at this one, right? That level. We're looking at, where is it? So we'll just place that there. We're looking at that level. We're also looking at this bottom level, right? And this top here, that I know it looks like a lot of mess, but there was something around there. Yeah, it actually landed quite not bad, right? So if we look at all these places, there's always price behaving funny around these places, and that's what we want, right? We want to just be aware that anything can happen at these stages, so it's better to be prepared. What's going on with me? Yeah, it's better to be prepared than unprepared. That price always respect previous plays. So if you can see, most of the places that were placed on, there's a bit of this thing won't move. Okay, so like this line, you can see it's still respected there, it's still played out. So even in the future, if you look at these places, It's still played out even right now. That's why it's behaving that way on that level, right? Here it did come out, it did still respect that area. So all those just give you red zones to say, okay, if price is going to get to those zones, I need to be prepared, or I should avoid and wait and see how price behaves there. Then I'll make a decision to trade off it. So yeah, that's about it. We'll of course expand more on it as we go forward. I hope that helps. I hope that helps. So this one you use the 30-minute time frame, 15-minute time frame. You just want the key levels that price will behave funny, so that you know the direction that it's going to behave in, right? Yeah. All right. Thank you.